When I was at that conference, the alumni thing, again, it was really interesting, and some people were asking me about, I asked them if they had sat yet for the CPA, and some had, some hadn't, but I got this article from a guy that usually come in here and speaks in here. His son actually wrote the article, and he's about, maybe a little older than some of you, and he wrote this great article on passing the CPA exam, and I've had people that I've given this to that said that really helped them to pass the CPA. It's a strategy kind of about how to take the CPA exam. So I'm going to make that available to you guys. I'm just going to put it out on Blackboard with today's slides, okay, at the end. So I encourage you to read it. We won't go through it now, but it just talks about how to make what order to take the tests in, how soon to take the tests. And one overall thing is, again, if you're going to sit as soon as you can after you finish this program, because this program has a very high pass rate on the CPA exam, primarily because you guys are so immersed, as you well know. And immersion is the key, because I see a lot of people at Siemens, for example, that'll try and pass the exam after working for 5 years, and even though they're doing really neat stuff, they're not doing audit and tax and all the sections. So if you can do it as soon as possible when you're immersed, you do better, And this just gives you some tips and the order to take it and some of that kind of thing, okay? So I'll put that out on Blackboard. It's not out there yet, but I'll put it out when we go. Okay, so now what we're going to do is spend a little time on our oversight here, and I want to thank you met Ben last week. He isn't here this week, but and again, this is new. I love this software for two reasons. One, versus say ACL, which is a different approach. One, because it's web-based, and I think that's really where we're going in the future is using the web, not just for analytics, but for everything that we're doing. We're going to see a lot more of that. And secondly, because it has this on-demand kind of feature where you can do like a test of your company and run it anytime you want at any point. But I want to make sure you understand that what we're going to teach today, where we would take this, is once we identify where we have problems and where we have risks using Oversight, this on-demand, then we're going to put these analytics in and run them all the time and this will be on the exam, have our closed-loop escalated alerting, okay? Very important, because then we really have a control when we have closed-loop escalated alerting. That means if someone violates one of these control requirements, it's going to get escalated to their boss, and there's a closed loop. You don't get out of it until the problem is solved and it's fixed. Remember, very important concept in controls, because if you don't have that, all you have is a lot of work chasing down things, okay? But what I wanted you to see in here is this, what we're doing in this exercise is we're doing what you would do at first to see where you are and where you ought to put your controls. We're assessing the risk, okay? Everyone following me on this? Okay, so what you're going to do today is you're going to go through this T&E data that we got, and you're going to try and find problems, okay? But once you find those problems, then we're going to say, okay, here's where sort of that top-down approach, here's where our significant issues are, here's where our risks are, and now I'm going to put in these analytics in order to address these risks. And I'm going to keep them in all the time, and then I'm going to move them to the business, and the business is going to do them. I may start it in auditing, but the business is going to monitor these completely. Now you've eliminated the opportunity to commit fraud, at least relative to these risks, okay? That's the idea here. So we identify problems and risks, we put in automated controls, and then we move those controls to the business, and we have to have this closed-loop automated alerting, or closed-loop escalated alerting, because that's really the control. That makes sure that everyone's doing it, and that changes behavior. Otherwise, we're just creating a lot of data and running people down. And I've experienced this where we have control problems, and we send notes out to people, and we say, you have this problem, please follow up on it. We send an email, and then we don't hear back from them. And then we go and call them again and say, what'd you do about this problem we found? And we still don't hear back from them. And so we're chasing people down, and that's not the idea of an internal control system. An internal control system should change behavior. So first I want to just a little bit by way of review, but also cover some of these slides here that, just turn this on here, that Ben had provided us. So last time, I just want to recap how it works, and then we're going to break in our groups and do some hands-on stuff here for a while, and then we'll be out of here by 12:30 or so. I get better teacher evaluations if I let you out a little early, right? Is that consistent? Yeah. Okay. So the themes that we're dealing with here are moving beyond sample testing. What did I tell you? Non-statistical sampling. We're not getting it done. That's ridiculous. If we did statistical sampling, you need 5 times as many auditors to do every audit. But continuous monitoring analysis becomes a best practice. Consolidation of audit islands of automation. I shared with you sort of where we're at today. We've done a lot of this stuff at Siemens, but we still don't really have an enterprise strategy for it, and we're doing it over here and over here and over there, and we're getting great results, but we're trying to get clear about who owns this. Is it auditing? When we're not just doing financial audit things, we're doing strategic and operational, and we're doing risk indicators. So who should be the owner in the business of this? That's a question that begs, and it can be anywhere from the strategy group to the senior management to the audit group, and so we're wrestling that down now. Enabling action is critical, so we must have, and this is what I talked about earlier, closing the loop, drive resolution, escalate alerts, document actions and resolution. So if you don't have this closed loop thing, if you're not enabling some type of action, you're not changing anything. You may know you have a problem with T&E, but you're not changing anything if you don't put analytics in, okay? And that's where I want you to be thinking beyond what I'm showing today in the class, that we're going to take these analytics now that we have an oversight and know where our problems are, and then we're going to put them in and address the problems. And traditional detective controls, manually intensive, and are not timely. So everyone knows the concept of detective versus preventative controls. Does everyone know the idea there? Yeah. Okay. So, and again, I would argue that we need both. Okay. Some companies, software companies in this space, I know the presidents of the companies, and their approach is we only do preventative controls, with the idea that if I do preventative controls really well, I don't need detective controls. Others say we only need detective controls because we're going to find, when we're doing population sampling, we're going to find everything. So why do I need to do any prevention? I'll find everything. Well, the truth of the matter is that things slip through on both of those, and you want to make sure you have both, because that's the right approach. Okay? All right, so provide a balance between controls and processes. And I want you to get this clear. Controls are not something you do in addition to processes. Controls are part of the process. Every process has to have controls, okay? Addressing risks within that process, unless it's a process that has no risks. And I don't know any processes that don't have risks. One of the things we struggle with in educating people in our internal control function at Siemens is that, you may make your journal entries and you may close the books, but you are not done until you do your control activities, because your control activities are just as important as making journal entries, closing the books, and other things you do. Okay, so that's part of your job, because people tend to say, "Oh, that control crap, yeah, that's the audit department stuff. I don't really do that, But no, that's part of your job, and you're not done until you do your control activities. Drive value from controls, not tick the box. That's why we want to use automation. And some of you, when you get out there in the real world, like I talked to some of the alumni, and they're doing these boring things, getting little samples and ticking this and tying this in with this and looking through reams of data and wondering why they went and got their MBA to do this. That's where you got to challenge that. Again, cloud-delivered solutions, that's where we're going. We're going to the cloud. Now there's a lot of resistance of going to the cloud because of security reasons and stuff, but the truth of the matter is that most cloud providers are better at security than your company is. Okay, so that's probably why we're going to go there sooner rather than later. Not that there's not still risks. And the way we independently review these companies, these cloud companies, is we use technologies like SSAE 16s, which are former SAS 70s. Those are third-party reviews where Ernst & Young, the firms make a lot of money doing this, and some of you might get into that. They come in and they look at third-party assurance providers, and they evaluate the control environment. And they look at your security and your change management and your computer operations, and they test all that independently. And then they produce a report that says that this cloud company does a great job or they have problems. Then there's also ISO standards like 31,000 and 27,000 that measure how secure an IT, and there's COBIT and ITIL and other things. So these cloud companies are getting all these good housekeeping seals and being rated as how good they are. So you have some level of assurance. It doesn't mean that some black hat is not stealing your data that works in one of these cloud companies. That's still a risk, but it's a risk in your own company too. So that's my opinion at least. All right, align controls with business objectives. We beat that one up pretty bad today. Near real-time controls can act as preventative controls. So we want to use real-time controls. Now, real-time is dependent on the type of data. So if I have monthly closing data, running it every day doesn't make it better because it only comes out once a month. Okay, so the nature of the data defines the real-time nature of it. Okay, so this is just. This is for the oversight tool. So we talked about ACL, and the most important thing to me about all this software stuff is not that you guys become technical geeks or something. My goal is that you see this software and you say, you know what, I can use this. This isn't that hard, or I could do this, and because none of you there's a few computer scientists in here, but most of you are not computer scientists, and I want you to be comfortable saying this is no harder than using Excel or whatever, So we start with extracting data, and I want you to see, too, that more and more today with things like XBRL that we'll talk about, relational databases, SAP HANA, and other things, getting the data is getting easier and easier. It is one of the stumbling blocks, though, because if you can't get the data, you can't run analytics. And IT's role is to provide you that data, as I said earlier, in a normalized fashion, and they should be able to do that. They will resist doing it a lot of times because they, are too busy or whatever, but that's important, And so we extract the data, then in Oversight we have the mapper that maps it into normalized database. And again, I gave that example before. Normalized just means that I got some data out of SAP, I got some out of Oracle, I got some out of a spreadsheet, and it had different names for the company. So now I'm going to take all that and normalize that as one field called company. So whenever you're doing your analytic and you're writing company equals Siemens, it knows what you're talking about, and then they have the analyzer, and that's the core engine that runs these predictive analytics. Now, we're focusing just on one piece, and I'll show you this when we get into the data. We're just focusing on the T&E, but there's all kinds of controls for all these others, and we're using sort of the pre-packaged controls out of Oversight, and next week I'll show you how we can write our own as well. But the ones they have are pretty extensive in here, so you can pick the ones. It's like a catalog. You go in and say, based on my risk, I want to have these controls and this one. I don't need that one. I don't need that one, but put this one in for me and run it. So, and I sort of like this on-demand thing because it's part of selling the value proposition of that. Because what's going to happen, what they're doing with Oversight, is they're going into companies that aren't really sure they have any problems, and they're running this thing. And they're finding that people are finding they have all kinds of problems, and then they say, oh, yeah, gee, I guess I'm not as clean as I thought I was. So, okay? And then we act on it. So, and I'm not going to be able to show you this today, but they have this workbench as well that they can follow through here. Okay, so now, these are some of the analytic techniques, and you saw these in ACL too. Boolean tests are just your nested tests that you're doing, if, then that. Numerical statistics, recurrence analysis, format analyzers. You don't need to know what all these are because in many cases, these are the tests they're running, and this is how they're calculating what the risk is, and we'll see that when it comes out here. Although it is good to know what you can do with this. Here at Rutgers, there's some interesting research that some of the PhD students have done around with Dr. Cohen around multivariate clustering. And sometimes when you get large amounts of data, you can't sit there. Let's say you have 10,000 anomalies. You can't sit there and drill down in each one and investigate each one. So what this does is it pairs data, and they do it with these nice charts. I'm trying to remember the PhD student that was working on the multivariate clustering. And what they can do is they can look at a set of data and tell you what types of problems you have based on the way the data clusters. So for example, this is going to be a three-way match problem because it clusters this way. And that way you can know you have a problem without drilling down on every individual one. The other way to do that is to go in and to cleanse it is to go in and set a high threshold. Like say, I'm only going to look at transactions that have an impact of more than $100,000. And then you might go from 10,000 to 10. And you can start to cleanse them and then go to a different level. So that's part of what you're going to do, because I'm here to tell you, when you first run this stuff, you're going to be shocked at what you find. I mean, even in the data you're going to look at here, that's T&E data out of Siemens, you're going to see all kinds of things that people are doing. And we're not, this is stuff you're not going to find if you don't use this technology. So you'll be shocked at how much you find. And some of it's not all fraud. Some of it's just mistakes that people make that we never find in data. And most of the data in most databases in most great companies, there's errors and there's a lot of problems. And unless you start cleansing it with technology, you're not going to find them. Okay? All right, so here's what we do. We start with extracting data, and that's often the challenge. We go to mapping it into one database. That's the normalization process. And then we run the core analytics on it. That's basically what we're doing here. Okay? So automated mapping, scalable platform. And when I say scalable platform, that means we can run this for a small set of data, or we can run it for millions of records in a major corporation. Okay? And then this is the Oversight platform, which we'll look at here in a minute, where it's giving you the risk, the confidence level. How do I know that I have the problem I think I have here? It gives you all the data, and then I can drill down on any of these, and it's down here, and we'll do some examples of this in a minute, where I can see, why does this look like a risk? It's doing the risk analysis for you. What's suspicious about this transaction? Well, someone went to a gentleman's club and they work for a bank, or they are buying things at Victoria's Secrets and they're a construction company. Why are they doing that? But it might be that they build Victoria's Secret stores, and that's why they're and so that might be okay. So detail why the exception was reported, prioritize the factors, root cause analysis, capture notes, and because this thing will also capture notes and logs. And by the way, all these tools, ACL, Approva, Approva, IDEA, Oversight, they keep logs of everything they find, because if you have audit evidence for the PCAOB, you need to go back and show that what you actually did, and so they have logs to show you what they actually did. Now this is this thing again about the automated alerting that it goes through, and I don't actually have this set up for this demo, but this is what it does. We might do that next week, actually, show you how it actually does it. But the bottom line is we go and we're going to look at a transaction, and if everything's okay, we're going to let it run through. If not, we're going to create an alert, a closed loop. See that word, closed loop, escalated alerting, and we have this thing you'll see in there, emails. It automatically sends the emails out to let people know that they have an issue and have to deal with it. And unless they go back in the tool, it will keep sending the email, and then it'll escalate after a week to their boss, and after another week to the boss. The system I showed you last week at Siemens, it goes right to the CFO's desk of the company in 4 weeks. So if you don't fix something, and where we have that system working, I don't think the CFO's gotten one memo, because people get it fixed. It changes behavior. And that's really what we're trying to do. We're not trying to run people's lives. We're not trying to spy on anybody. But when it comes to following processes in a business, we all need to follow the processes, Okay, so you have your setup, and the way they do this on-demand process, okay, we have a setup where we fill out, and I did this for this. I filled out a questionnaire about, how we do our company, our T&E, and what our risk factors are. Then they modify that for certain industries. So if it's a construction industry and you're buying things from Home Depot, that's probably fine. If you're a bank and you're buying things from Home Depot, I don't know. Why are you buying things from Home Depot when you're a bank? So there's industry-specific things that create the risk, okay? And then the client just provides the data set in a set format, okay? Then they run their analytics, and they run these tests, and then you get a result, and that's what we're going to look at today, that result. And then you have this sort of closed loop here where you investigate, you escalate, you correct, you refine, you review. And I'll add to that. And then you take an analytic, you write the analytic, you put it in, and then you move it to the business and let it run in the business. And you as an auditor only come back and check it, okay? Because what I shared before, what I have responsibility internal control system, I want to make sure that we're using analytics. If only the auditors are using analytics, then I'm not going to be able to fix things that they find because I'm not going to have a way to do that, okay? And then I won't go into this in detail, but this is the whole cloud idea. And again, this is the future, I think, because now you have your data and your analytics are on a cloud. You can go through a catalog and say, I'd like to get accounts payable, accounts receivable, and T&E. Those are the ones I want to run, so I'll pay X amount for them. I don't need to set up servers and data centers. And we've run into this. We've been doing this for almost 10 years now, or 7 years anyway, at Siemens. And, setting up your own servers for each software and, having the right capacity and making sure that the server patches are updated properly and all the other stuff that comes with, we realized at Siemens, we outsourced our whole IT function to a company called Atos because we realized that's not our core business. We're not IT people, and so, and more companies are doing that. So the cloud is where we're going here. Anybody think it's not a good idea to go to the cloud? I want you to disagree with me in class too. Anybody, do you guys do a lot of things on the cloud? Are you cloud advocates? Yeah. Yeah. Well, thanks for your honesty. Why? Mm-hmm. 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 Yeah. Cloud Inc. or Amazon or whatever. Mm-hmm. So you think it creates more risk, really? Mm-hmm. Yeah. Well, that's a good point. Yeah. Yeah. Mm-hmm. 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 Yeah. Mm-hmm. Yeah, yeah. Oh, that's a good point. Yeah. I mean, for us, we decided there's some things, and you're right, the confusion, sometimes there's an internal cloud, which is, my own cloud within Siemens, and then I might also have an external cloud. And we're actually doing some things where we're taking our quote-unquote golden nuggets, the real sensitive stuff, and we're not going to put it out in the cloud. We're setting up what we call an Eagle data center, which is a super secure, underground data center in Fürth, Germany somewhere that, is like Fort Knox on steroids, and we're keeping certain things in there that we're not going to put out in the cloud. But then other things we agreed we would put out in the cloud. So that's a good point, yeah. One technology that we'll talk about in the class here is in-memory analytics, or what's called HANA from SAP. And what they're doing is they're basically taking the entire, if you could picture this, an entire data warehouse or the entire database and putting it in RAM memory through optimization technology. So that now I have all my analytics are run, instead of storing all this data, I can run these analytics real time on the actual data. We're using it at Siemens as SAP's largest customer, and more people are doing that. So I can write real-time analytics that run, I don't have to go get data from somewhere. The other important thing is the transportation of data. As I'm moving data, it has to be FTP hard encryption, so that it's safe. It's safe when it's traveling, because these people that are cracking into systems, they can also unencrypt data with tools they have and other things. So, Okay, good point. Okay. So the current state is, many companies see control as compliance-mandated activities. We got to do this because of HIPAA, because of SOA, because of OSHA, or whatever. Controls have been layered on top of existing processes in an effort to comply in time. And that's, again, where I always say this, if you have a broken process, you have messed up controls. And if you have screwed up controls, you have a broken process. And they go hand in hand. And if you have a process that you can't explain to me on one page of paper, at least at a high level, it ain't going to work. And that's one of the problems. Whenever I go to Siemens and I get a document that has 300 pages explaining how we do something, I say, great, but it's not working because it's too complicated. And if processes are too complicated, people don't understand them, and the controls aren't working. And again, in some cases, it's because we just piled controls on top. We've got automated controls on top of manual controls, and we never got rid of the manual controls. And you wouldn't believe how many people talk about culture change in the workplace today. They can't get away from a signed signature on a piece of paper. They got to have the paper because they've always had it for 20 years, including some of the accounting firms. They got to have that paper with a signature on it. When an electronic signature on a population basis is even better, a better control, because I signed off on that thing, and I'm not chasing paper down. But so we keep the paper, and then we put automation on top of it. Or we have broken processes, and we wonder why we have control problems. And that's a lot of what I do in my job. We end up changing processes because the controls tell you that the process is too complicated, isn't working, isn't effective. Right? Risk-based approach not often taken. That's, again, against control objectives. AS5 is a risk-based approach. That's what we're told to do. Control frameworks have been built up based upon the outcome of historic findings. So we're a step behind looking at what broke before and trying to fix what broke before. Again, controls are operating to meet compliance things. We're only worried about just getting by, not improving our processes, and I think that's really important. Controls are not integrated into the process, or they're not owned in the process, and they're seen as something that auditors do, or control people do. Only necessary controls are in place is the right thing in the future. Controls are evaluated as change to the business. You often have a conversation when they're putting in a new system or a new process, and no one's there asking about the controls. What are the controls on this new process? Oh, we'll worry about that later. Okay, and then Sarbanes-Oxley comes in, and you got 15 deficiencies, and everyone's racing around trying to figure out what the controls are. That happens a lot, especially with IT systems, with migrations. Controls will meet business needs in addition to compliance, okay? So you want controls that are embedded ownership of controls in the business. Teach the business about risk and compliance. One thing GE, one of our competitors, does really well is they create a risk culture. They train every manager on risk management and controls every year. They have Lean and Six Sigma certified people that understand controls, control management, and process management. So, because that's the problem. A lot of people take an accounting course and they learn about auditing and controls, and then they forget about it and go do their job, And I was guilty of that. I spent years as a controller saying, we don't need all this control crap. We trust our people, And then I saw the frauds that happened and became a fraud investigator and learned that serious problem. And don't trust all your people. Don't put anybody in a position where they can perpetrate or conceal a fraud, because I don't care if they're an angel, it's going to happen. Reevaluate current processes, reduce real time, get business buy-in by showing how controls can help. Okay, review transactions, population stuff, automated analytics, workflows, real time, okay, all the stuff we're preaching here, okay? All right, and then this is just types of risks. Everyone agrees we must control regulatory risks, but we don't think about it with operational risks, and again, that's where our biggest exposure is, okay? And then I won't go into this because you guys understand this, but this idea of preventative versus detective controls, and again, we want to leverage technology to do both, okay? And control rationalization, make controls key and supportive. Here you can see where, in terms of timeliness, the effort of a preventive control is much higher than an automated control. And the percentage of covering is sampling with many of your preventive controls, and it can be, or manual preventive controls, it can be 100% coverage, and that's what we want to drive towards, okay? So I'm not going to go into all this, but detective controls are costly because when you find problems, you often find thousands of problems. If I can prevent the problem from happening instead of waiting until I find it after the fact when it's already been posted to the ledger and in my books, now I have to unravel a big mess. I may have to restate my earnings. I have all kinds of things. Okay. And then again, we're going to accept certain types of risks. So I might decide that I'm just going to accept a risk, and I'm not going to put a control in. But you want to make sure where you decide to accept risk that you've addressed the biggest things and have the weight in there. Okay. So I'll go through this here, and this is just an example. Okay, so that's just a review. Now what I'd like you to do is go ahead and get on your computers, and what we're going to do, or no, actually, wait a minute on that. Let me take you through, I want to give you a quick overview here again of, but you can go ahead and log in. Use that link to log in that we used last time. And I had one question. Someone was having trouble getting their ID, and Tiffany, if you give Tiffany, raise your hand again so everyone knows Tiffany there. Everyone know Tiffany? Let's give her a big hand. She does a great job, huh? Tiffany. Yeah. But give her your name if you're having a problem, and just look on with someone else for today, if you go through. But so what we're going to do here is I want to take you through the system, show you how to use it a little bit, and then we're going to break into our groups, and I'm going to have you guys go off and find problems, okay? And I want to have one leader in each group that's going to write down what the things you found are, okay? And then I would like that person to be ready to just give us a quick overview of what you found, okay? We found, this looks suspicious, this one looks suspicious, and maybe why you thought it was suspicious. But first, let me take you through. So first we'll go, let me just take you through. You don't have to log in now, and just follow me here. But so we'll start with the dashboard. So this is the thing that the CFO with the company's looking at, okay? And it tells me that I ran this T&E thing for, some data, company X, Siemens, whatever, and I found 739,000 findings. The value of the travel and entertainment expense was 739,000 for these transactions, okay? And then I found that I had 1,900 exceptions. And remember, this is just a random selection of data out of my company. And, these are the things. Now, we by the way, we have controls that run against this stuff, too. But I want to see what you guys find if you find the same stuff we find, okay? And we have so out of 739,000, we had 1,900 things that are suspicious, that are a problem, or potentially a problem. 3.2% of them, there were some 60,000 total transactions. And this is just one small piece of T&E data. So you could imagine if you wanted to go find this manually, how long that would take to do, to find any of this. And manually, you don't find it. And then this is sort of a credit score here, that should be around 800 or so. It just tells you what's the risk level of the data based on a formula. Okay, and then I have the ability, so I'm the CFO looking at this for my company. I have the ability to, look at the world here, all right? And I can see where I have the most. Now, if it was the whole world, this was just happened to be U.S. data, but I could have had data all over the world. It would have showed me where it is. And then I could kind of see, where am I having my biggest problems in North America? Well, I got the U.S. is the biggest one, Canada less, and I guess that's Mexico or whatever. And if I want to say my exception of the 739,000, 62,000 is in California, 48,000 is in Texas. And I can look at that. I can go through and I can look at the exception rate by month, okay, and I can drill down on any of these too for the top 5 issues. And for some reason, earlier in June and July in the summer, we had more problems and we did more exceptions than later on. Why might that be? Anybody know? Is low impact, so 700 is low impact, but high likelihood. And it's a cultural issue, right? Because, again, I'm the guy buying $200 bottles of wine, violating the policy, and you all work for me, and Rod goes out, and when Rod goes out, we buy $200 bottles of wine. What do you think you're going to do? So the average spend for, T&E is, 1 or 2% of a company's total revenue. But it might be a culture problem that says that these are the same people that are doing earnings adjustments and AP issues and other things, So, I mean, I agree with you guys, Anthony. I agree with you that maybe you want to take a risk-based approach, and you do, and you don't want to chase good money after bad. I mean, you don't want to spend a whole lot of money on something that's not a big risk. But I think you got to be careful when you get to things like T&E, because that's your culture. That's the tone at the top that you're setting, in your organization. And and it's not. There's a lot of companies that ignore it. They say we spend $2 billion a year in a $100 million company, and T&E. I even hear people say, well, Anthony's a great salesman, so if he abuses the T&E thing, that's okay. He's selling product for us. Clearly justify you stealing from the company, right? The what? Bending the rules. Okay. Yeah. No, good points. Sure, they'll say, this is not a material adjustment. But I'll tell you the other thing we're going to say now, and this is more and more, is that fraud is an issue that we're not getting at. Remember, I showed you 3% of the frauds are being found by the public accounting firms. And now people are raising the question, is that appropriate? And if it's not their responsibilities, whose responsibility is it to find the fraud? It's nobody's. So it goes on, And if you really believe, per the ACFE empirical data, that 5% of revenue is fraud, where are you going to get 5%? You have to sell $1.30 or $1.50 of new product to save $1. If you stop this just by using technology, and by the way, the technology is not very expensive. You can, for a lot less than $1 million, you could install this in the whole company and check every T&E and change the behavior. That goes right to your bottom line. So it goes to your profit. So, but yeah, it is a risk-based decision. I just be careful to realize that some things like T&E, and I'm not saying T&E isn't the biggest area. Asset misappropriation is the biggest fraud area. That's where people are ripping companies off. T&E is a smaller area, but it's a cultural area, and it's a tone area. So, okay, good points. All right, so then I can go here to the MCC analysis, the codes, and I can look at, most of these things are lodging and resorts. Well, that's not surprising, because that's what companies are, that's what you're doing with T&E. There's some things for industrial type companies, and then it gives you by each one, what the amount of the 700,000. 110 of it was lodging and hotels, and then I can drill down on any one of these, and I can see what hotels. Maybe there's one hotel that, or maybe there's something in here that's a hotel that's really whatever, a gentleman's club or whatever. Okay, and it's in ascending order. And by the way, anywhere on here you can click on this and readjust the numbers to look at, from the bottom up instead of the top down. Okay, I just want to take you through what you're going to use here in a minute to do this. So this gives you by MCC code. This is by the actual merchant. So let's say I go down here and I say, I look at these and I say, gee, why is Best Buy on here? What are we doing? Why are we buying things from Best Buy? Okay. And I can go down and see, who was the employee. Wherever it says no name, that's a name. Okay, let's just pretend that's a name. It is actually a name, but it's not on here. But there's a number there. So this guy spent $1,900 at Best Buy. Well, what if I saw, one guy, everyone spent, maybe there's electronic components or, things that we got to buy, people have to buy from Best Buy, but because we're an electronics company. But maybe there's one guy here that spent $50,000 on a large screen TV and new computers for his house and a movie theater in his house, and that might be something that might want to raise your attention. Right? Okay, so then we can look at that. Then we go over here and we look at the employees, and we see that one person here has $28,000 of this. So maybe there's a few employees that are. You saw in that EY example where they, instead of running out and nailing people, they actually went through and gave people their own personal risk score so they can see how they fit in the risk score. And this is this whole idea about changing a culture so that it's not cool to be in the top 10 of the big spenders in a company that's trying to save money. That's not where you want to be. Like I said, if you put it in the lunchroom, people might say, "Whoa, there's a problem there." Right? Okay, and then the workflow, we won't do that because we don't have enough of them. Root cause, and then there's just a summary. So this is and remember we said there's 4 insights that we're working with. We have T&E fraud risk, and you'll see this in the profile. We have T&E meal and lodging, policy misuse, and suspicious out-of-pocket transactions, okay? And so when we go to the profile, and you can see the amounts by each of these. So fraud is the highest one with 237,000, and then the others make up the 739. So these are insight analytics that have tests that specifically look for fraud, other ones that specifically look for some type of duplicate, which could be a mistake or whatever. Others are policies. And very important here, you know, one of the things we found once when we started doing some of these analytics was we had a policy that was outdated that said the acceptable meal allowance for breakfast is $5. Okay, so go try and find breakfast at McDonald's for $5. You know, you can't find breakfast for $5. Okay, so that gives you the statistics. Okay, now I want to go over to the workbench here. Okay. And here we have the 4 areas. I just want to go cover this with you. So the dashboard is the one we just looked at. And remember, that's a different ID that you sign in with on that. So then this is the one we're going to work in today. And I just want to take you through it real quick. We have T&E here, and we have the 4 or 5 categories. Actually, the duplicate review category, there's nothing in that one. But I'll show you what some of those things would be. So the fraud risk one is here. And that gives you what you saw there, the MCC codes, all right? And it's going to break it out like this. And this is what I want you guys to do in your groups. I want you to go through these, and I want you to use the sorting functions or the drill down functions. So, like, you know, here's one that's a plumbing, let's use an example. Here's one that's a plumbing supply company that someone bought something with. And why? And remember, there's nothing on here that wasn't brought out as some type of risk. It doesn't mean it's a fraud or even a mistake. It could be legitimate, but I'd just like you to find the ones that you would think, again, I want you in the shoes of the CEO of this company or a manager in this company, and these people work for you, and you're trying to see, does everything look copacetic here? And so this one was, you know, this Chillers Incorporated. It was $2,000. It was listed, and you always want to look for the titles, and this is where we talked about using big data, you know, meetings and events. Like if I see things that say facilitation payments or, you know, payments for projects or something that, you know, no one's going to put in here, you know, that it's a bribe. But if I see things in there that say facilitation payments or payments for projects or something suspicious. So this one was here because the transaction is high in the merchant category. In other words, plumbing and heating and equipment and suppliers aren't places that people should be buying things for travel and entertainment. What are you buying for travel and entertainment in a plumbing supply store? Okay. There are 3 other purchases totaling $3,000 in the same merchant category. That's another risk. So they used all those Boolean reviews and things to say, why would these maybe be suspicious? Okay. The lower risk because the MCC is used more frequently. So if I'm Siemens and I'm an engineering company, and I have marketing people that are out traveling and setting up displays, and they have to go buy a screwdriver at Home Depot in order to set up the display, you know, and a lot of people are doing it, then it's probably not a big risk, you know. If I'm a bank and 3 people went to Home Depot and bought, you know, $10,000 worth of stuff, that's probably not something we're using at the bank, okay. So the industry helps you determine where you might have your risk, okay. So, and then the expense type is rarely used for this group. Okay, so that's another. So then we can look at the merchants, we can look at the employees, and then the emails we're not going to go into there because we didn't do that. But that's where you'd have your closed loop alerting going on in the emails. And then there's high risk transactions down, rare expense types that are used, infrequent codes that are only used once in a while. That's suspicious. Weekend and holiday purchases. So these are things that were purchased on a holiday or a weekend. You know, I remember a story about a big fraud that was found, and all the guy did was he went in and looked at the data for this company for shipments that were made on weekends when the company didn't ship on weekends. So someone was going into the warehouse and they were shipping something to themselves. Okay, that's a lot of times an indication of the day, the timing of something happening. Okay, all right. All right, and then the other, so this is where you're going to work, and I have these groups set up here, and I'm going to real quickly divide you into groups and get started, but this is the profiles part. Now let me just show you some other things that are on here. This is a listing of exceptions. Now remember I said that we're only dealing with T&E. But if you wanted to, they have these insights for all these areas. Okay, so this is corporate T&E. That's the only place you'll find the data on here, I think. But there's also HR, AP, payroll, capital expenditures, and all these other abbreviations. I'm not even sure what all of them are. And there's all kinds of analytics we could run on that too. And back to Anthony's point earlier, you know, these people that are cheating on their T&E may also be doing other things in the company, and that's why the materiality of the T&E may not be that big, but it might be a person I don't want in my company that's putting me at huge risk in my company because now I may be, you know, cited for corruption, and this employee might be the person that did it. So, but I think it's really important that, you know, that we do change culture too. So this one, if you drill down onto the T&E part here, you'll see all the same data, you know, the errors, misuse, where is it? Corporate T&E, misuse, here's the misuse ones, and here's the fraud ones, okay? And the next one is just the entities, and this just lists all of the, oops, let me just pull this one up. This is just, you know, what types of transactions, and if you go in here, you'll see under the expense detail, only the ones that apply to expense reports, you'll see the same data in there. So you can search on these too. But we're primarily, for today's class, just going to spend time in the profile one, okay? So let me bring this back up. And then the one area in the profile where we don't have any data is this duplicate review one here, okay? And this is really important. This is where you want to look at one of the big problems in this duplicate review is you have people who have a P card and they go to a restaurant and they buy a meal, and they also a P card is a corporate card that's used to, you know, pay for expenses in the HR department or wherever. And then they have a travel card, which I carry with me. I have an American Express travel card with Siemens here. But sometimes they take a receipt and put it on both. So they get reimbursed twice. You know, they put it once on the P card and once on the travel card. So that's one where you want to look at duplicate reviews, okay? So, and then other ones that would be duplicates would be, you know, employees that get cash out and pay for something with cash and also with their card. Same employee, cash credits the same. Okay, and so there's all kinds of things you do with duplicates, but we didn't have any data for that. I mean, I wanted to do this on actual data as opposed to test data because we're using test data in the other softwares. I just want to see what you guys find. So what I'd like to do is, I'm trying to think of the fastest way to do this, is just each, you know, I wanted to have, we should have about maybe 10 groups, and I'd just like you to, and what we did is we took the data and broke it out by date. So for example, in group 1, we have this data. There's about 174 records. There's things that have gone on in each of these categories. You can run the profiles on each of these categories and see what might look suspicious in here. And so you can sort, if you key on, you know, the dollar amount here, you can key on that and sort them. You can, and you know, you might find actually negative numbers. Why might you have negative numbers in a T&E? Anybody know? What might I have a negative number for? Yeah, refund for usually airlines and stuff, okay? So that doesn't necessarily mean it's a problem, but that's a real delicate one too, because some people book flights, then they get them refunded, and then they take out the refund and keep it themselves or something. That's something that goes on.